So one of the things that I never talk about is single family. When you're purchasing single family to generate additional income, it's a little trickier than just doing commercial. Primarily, our team does a lot of commercial stuff, but every once in a while, we sneak in a couple of single family type deals, right? The cool thing about single family is that there's a ton of inventory. Single family residences make up about half of all the rental properties in the United States. So it is sometimes, for certain people, it is a great starting point for investors to really, jump in and really learn how this kind of stuff works, okay? I guess the real question is it a good rental investment? Now, short answer is yes, it can be. It really just depends on your skill level and how much return you're looking for, how much work you want to put in. Because single families are not necessarily easy to do, a little tougher to do, right? Because you don't have the massive cash flow needed to go ahead and hire a management team, get the people in to really run the property like a business. With single family, a little tougher. You're doing a lot more hands-on type scenario. This is a property that I bought some time ago, probably about 6-7 months ago. There's already a tenant in here. The tenant left and picked it up for a really good price. So probably about $50K, I believe, is what we did. And went ahead, freshened it up a little bit. Not quite done yet, but we're at a place where we can at least start showing it to people, right? But give it a fresh coat of paint, new flooring, put the plank flooring in. We cleaned up the kitchen a little bit, did some other repairs, and we're gonna get it ready for rent. By itself, maybe you clear, I don't know, $300 a month. Not killer money, right? And keep in mind, whenever you're doing these types of deals, you're always setting aside money into a reserve account too. Thing is though, is that if you're just doing one of these things and the house goes vacant like it is now, you're paying for it out of your pocket. That's one of the big downsides when it comes to single family, right? That's why when it comes to single family, in my opinion, you need to be doing a lot of these things. You need to do a lot of these houses. You can't just have one. You have to have many, all going at the same time and build in a lot of reserve in the event that you do lose a tenant, okay? So that's one of the key aspects when it comes to doing these types of deals. As far as unit turns are concerned, as far as things like that, yeah, I mean, it's comparable to an apartment, maybe a little more depending on what it is. I mean, in this case, when we bought the asset, I always set aside some cash for other things that we didn't know about. In this case, there's a little sunroom off the kitchen here, and we didn't know it, but there was water coming in. Someone put plastic on top of the ceiling here, like there's a sheet of plastic to keep the water coming through the roof contained, right? It was bizarre. But anyway, we ended up having to replace the roof in that section, right? So $4,000. Weren't expecting it, So these are different things when you're doing these types of house flips, I guess if you want to call it that. Even though this is a longer term rental, that's how I like to do things. You really have to set aside enough cash to make sure that you're going to be all set in case some surprise like that comes up. Generally, what I like to buy is anywhere between 12 to 1,400 square feet. At least one bathroom. 3 bedrooms are fine. 4 bedrooms is okay. I don't go beyond that, especially having only one bed. We usually have a garage. In this case, we have a 2-car garage, good sized backyard as well. I mean, basically that's it, So I think that the all-in on this deal might be about $72,000, I think. And we're going to be including carrying costs. You have to include the carrying costs in there too, right? So meaning that if it stays vacant here for a month, you have to cover that somehow, right? It's included in your overall what are you in for in the deal. And then I think that as far as equity is concerned, other houses around here are trading for about $110,000. So good, there's some built-in equity there. Even though we're hanging on to this one, it's going to be a long-term rental, but it'll probably rent for about $1,450 or so. So it's going to be good. I think we're going to make more than the $300 I mentioned earlier. But again, that's the average, right? Because you have some that are a little more, some that are a little less. So sometimes you have some other like I said, unintentional expenses that come up, and you have to make sure that you have enough cash to support it, right? So the story here is that I'm a real big proponent in doing big commercial deals. That's really, those deals are far easier. When the deal is big, a lot of people, a lot of lenders want to do those deals. However, you know what? If you're starting out, you don't know where to find those types of lenders, you're not really sure how to do it, doing a single family deal is a good starting point. Just what I recommend, though, get in, really get your hands dirty, understand what it is that you're getting into, know the market, know the location, know the square footage, know what's going on in that area. The location is everything when it comes to these deals, and go ahead and get your hands dirty. If you're intent on doing a single family, great. Do a second one fairly quickly. Then do a third, and do a fourth, and do a fifth. Just keep on going, all right? Another reason why I like the single families too, by the way, is that when you have the lawn, you have any other type of issue related to the property, snow removal here in Cleveland, you have to deal with that. It's all on the tenant. They handle all the bills, they handle all the water, they handle everything. It's way easier to manage because you put all the billing in their name. So you have that, and depending on how you finance one of these things, you can use some heavy leverage. You know, if you say you're going to live there and you change your mind all of a sudden, right? You can put your 3% down, get into the property. You can certainly do that. But if you go ahead and get a hard money loan or something like that, one of these house flipping loans type scenario, typically you're putting down 20%. You make sure you have enough reserve. Make sure you have enough cash set aside to float the property and do the repairs you need to do. Okay, so. Anyway, if you want to learn how to do this kind of stuff, get into the Cash Flow Dealmaker Club. You know, it's totally free. It's on Facebook. As I said, we primarily cover commercial type deals, but like I said, you gotta, if you want to start somewhere, this isn't a bad place to start either. Okay, so go ahead and check it out. Okay, I'll include a link in the description, and if you have any questions, please reach out. Okay, have a great day, guys. I will talk to you soon.